Welcome back to our Talking Economics series with the Commonwealth Bank's Chief Economist, Stephen Halmarick. Stephen, thanks for joining us.
My pleasure, thank you.
Stephen, can we start with the August board meeting, potentially a live meeting based on upcoming inflation data?
Yes, that's right. We get the June quarter inflation numbers on the 31st of July, so the very end of the month. We're expecting an increase in the quarter of 1%, and that'll see the annual inflation rate increase marginally from 3.6% in the March quarter to 3.7% in the June quarter. Clearly, the Reserve Bank wants inflation to be going down, not back up. On our forecast, we don't think that inflation number's high enough to see an interest rate rise at the August board meeting, which will be the first Tuesday of August. But that's certainly the risk, that we get a higher than expected number and the Reserve Bank's forced to put interest rates up again in early August. As I said, not our base case, but that's certainly a risk worth highlighting.
Since we last saw you, a lot of global technology and political events affecting the broader markets. In your view, do you think that will impact the RBA?
I don't think so. Clearly, there's big political events happening in the US with the Democrats now changing to Kamala Harris as the candidate. Markets have begun anticipating a Donald Trump victory. And generally the view there is that policies of a second Trump presidency would actually add to inflation over the medium term. So some of that's begun to be factored into markets. But I think all of this is in the unknown and into the future, and I don't think the Reserve Bank's going to be focusing on that in the near term.
Now, the CommBank Household Spending Insights for June showed the index jumped by 0.6%. Just wondering what else the report showed.
So yes, household spending insights up 0.6% in the month of June, really led by things like recreation and hospitality and a bit of food and beverage. The recreation was around holiday travel, so people still spending a bit of money on holidays. But we could see continued cutback in things like household goods. And if we look at the year to June, certainly the theme remains that people are spending more money on essential services, things like insurance and utilities and health, and really cutting back on other things like household goods. We can also see, if we look at spending by home ownership status, renters are actually doing it tough. So spending for renters is actually declining 0.6% in the year to June, while those that own their home with a mortgage or own their home outright, spending is actually still increasing to a small degree.
Always great data. Finally, house prices rose by 3.7% for the first half of 2024. We're expecting a rise of 7% for the calendar year. Can you explain the strength of pricing? What is driving that?
So really interesting, although interest rates have gone up and of course consumer spending pretty soft, house prices just keep rising. So the main issue here is the lack of supply of new residential property. So demand has been increasing mainly because of increasing population growth, and we're just really not building anywhere near enough new residential properties to meet that increase in demand. So Economics 101, when demand exceeds supply, there's only one thing that can happen to the price, and it's been going up. So we're expecting a 7% increase this year and another 5% increase in prices in 2025. And that big gap between demand and supply, it looks like it's going to remain in place for at least a few more years.
Well, great insights. Stephen, thanks for your time.
My pleasure. Thank you.